Welcome to the show, Ernesto Cordero. Thank you so much for joining us. Minister, I want first of all to just ask you about the world economy in general. Over the last 2 months, it's just become a lot more difficult to predict where inflation is going, what the risks to the world economy are. How concerned are you about what we're seeing, not only in Japan, but of course in the Middle East, and inflation pressures around the world?
Well, I think that the last couple of months are a great lesson for everyone. Nobody 3 months ago would be expecting what are we living today. So I think it's very important that we shouldn't take anything for granted. In the case for Mexico, Mexico, as you know, is an emergent economy with very good outlook for the future. I think it's very relevant, the inflation, what's going to be the monetary policies of the G20 countries, what are going to be the exit strategies, and that's for us probably is the most relevant right now.
And of course, I covered the G20 and the G7 for many years, and they get a lot of flack saying, oh, you're not doing anything, you're not coordinating, the G20 countries can't get along. And on Friday, it was the first time that they actually coordinated to intervene on the yen. Does that give you hope that they'll also be able to intervene and coordinate on these exit plans together?
Yeah, certainly. I think that what happened on Friday was very good for everyone. Of course, it was under very extreme conditions. What happened in Japan is probably something that who never have survived an earthquake like this could not believe what's going on right there. So I think it's very, very important, and certainly that gives us hope that we are going to have a better coordination. Everybody is going to know when are we going to change monetary policy. Everybody is going to have time to take provisions, and that's very relevant for us.
But Minister, actually, how difficult is it for you now that the Fed is even talking about a third stimulus package? Here in Europe, we're talking about exit plans. It must be very difficult to be a neighboring country from the US and actually having all this cheap cash coming in from the US.
Yes, certainly that's relevant for us. Mexican currency, as any other currency in the emerging markets, has been appreciating. Well, the good thing for Mexico is the real appreciation is probably not as big as in other economies. And Mexico, as you know, is a very important exporting country. But we are very powerful exporting, but all our advantage do not rely only on currency, rely in some other aspects, geographical location, logistics, human capital. So for Mexico, it's not as bad as in any other economies.
Minister, keep it there because, of course, we want to put the focus on oil, and oil is climbing again today. Allied airstrikes in Libya are threatening to prolong a supply outage, while oil starting the week higher in both London and New York, with Western powers firing on Libya. Brent is heading for $116 a barrel, with NYMEX crude around 103, while Colonel Gaddafi is vowing to repel attacks by missiles and warplanes against military installations. Libya's crude output has fallen to a quarter of what it was before the crisis, and the chairman of the national oil company says it could stop altogether. So in terms, Minister, of what impact that has, of course, on your inflation expectations. Now, you're not reliant on Middle East oil, but it pushes the price of oil and therefore of inflation around the world. Does it make your job that much more difficult?
Well, certainly it is. Again, Mexico has a peculiarity. Right now it's probably one of the only emerging markets that we do not have inflationary pressure so far. So we can stand that for a little bit better than some other economies that right now they have been showing some inflation going on there. So Mexico is in a better position to stand for that. Certainly we are concerned that the levels of the oil prices right now could be a deterrent for economic recovery, and for Mexico the most important thing is to have a global recovery, even that we are oil producers, and somebody could expect that we are going to have a lot of windfall from this.
But in terms of the risk of a double-dip recession across the world, and you say this is the single biggest risk to the Mexican's economy, how much of a chance is it that we will actually dip back into pre-crisis levels because of the price of oil?
Well, it's going to depend in how high the oil prices go. At this precise moment, I don't think that could be possible to have a double dip at the levels that we have today. But if the level increased dramatically in the next weeks and they remain very high for several months, well, probably we could have a problem.
Mexico, of course, does have oil. You were just mentioning it. Does it change the way that you perceive this industry? Are you going to invest there more? Because it seems that there is so unrest in the Middle East that may potentially continue.
Well, certainly. I mean, right now, the oil industry is profitable almost everywhere, almost in every well. So certainly there's a lot of investment going on right now because of the oil prices.
The forecast for the price of oil, I know it's very difficult, but a lot of ministers, and actually a lot of analysts are saying we expect volatility, but we've probably reached the high.
Well, it's very difficult. I mean, the only thing for sure is there's going to be a huge volatility, as you mentioned, but I wouldn't dare to make a forecast. I mean, it's
very difficult.
It's very difficult, and let's wait and let's see, and hopefully it's not going to be so high.
First of all, I just wanted to talk about your growth forecast. Do you believe it'll be more than 4%? Because actually, a lot of the economists we've been speaking to think that it will grow by 4.5%. So are you going to increase your forecast as well?
Well, right now all the forecasts are between 4 and 5%. The most conservative is the one of the Minister of Finance. But certainly I think that things are improving, and we will be reviewing our forecast, and I'm sure we will make it higher.
Review on the higher side?
Yeah.
And how much did your economy grow last year?
5.5%. So, yeah, I think that the overview for the Mexican economy this year and next year, it's quite good. And we believe that we are going to have a very good rally in terms of economic growth for the next years.
Now, Minister, I was speaking to your central bank governor just a couple of months ago, and we were talking about the dollar options that you auction, and he was saying that that may change depending on market conditions. Is this still under review?
Yes, I think that we are reviewing that. Very important thing is that we are not intervening in the market. We are buying dollars to accumulate international reserves, but the amount that we are accumulating, even that it's very important to build a buffer for external shock, is not enough to affect the market. So this is very, very relevant. We are considering to increase the rhythm of international reserves accumulation, but certainly that's not going to, is not going to be in such amount that it could affect the market in Mexico.
But if you see the peso at a certain level, I know we've been speaking to some analysts at Credit Suisse saying that you may actually intervene or do something if the peso touches 11.70 per dollar. Is this the kind of level where you would need to take some action?
No, we are not taking actions under that considerations. So far, the real appreciation of the peso, as I mentioned before, is not as large as some other economies that are our competitors in the international markets. So far, we feel comfortable with the level that we have. We believe in the market. We are not going to intervene. We are not going to impose capital controls. So far, we are relying in the market.
And so you're not going to change also the amount of dollar options that you're auctioning?
Well, that's under consideration, but certainly the amount that, if we change the amount, is going to be not so large that it could affect the market.
So what are we talking about, 100 million or even less?
Well, it's under review right now.
Minister, talk to me a little bit about inflation, because we were talking before about, the impact that this inflation across the world has on Mexico, and you were saying actually it's very limited in terms of the impact on the actual country.
Yes. All the measures that we have of the GDP gap that we have in Mexico is that we are not as close as our potential GDP. So there's a lot of room for not having inflationary pressure so far. All the international pressure that we have, all the, the price of food has not translated into the Mexican economy so far.
So these are still under control, and it won't have an impact, of course, on the central bank policy?
Yes. Well, that depends on the central bank. We are very respectful on that, and that's something that they should have to consider.
Minister Cordero, thank you so much. A great pleasure to have you in the studio. I hope we get you to speak to you very soon.
Thank you very much.
Thank you.